Nifty is now down about 10-13 points. Very quiet opening.
Currently down 130 points on the Nifty.
As far as the markets are concerned, they continue to be under pressure. A wee bit of recovery is what we've seen from the lows.
From the low of the day, which is 17,856, this is quite a decent recovery, which is coming through almost 65 points.
We are holding above 17,900. It's the IT index which made a remarkable recovery from the day's low. At one point of time, the Nifty IT index was down 2%, but ends with a cut of close to about 0.8%.
Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Stock markets reverse Monday's gains to end with sharp cuts. Sensex loses over 600 points. Nifty falls below 18,000. Banks and IT stocks lead the fall. The Indian rupee rises to a new one-month high against the dollar on expectations that the US Federal Reserve could turn less hawkish. A weak dollar and a fall in crude globally also aids the currency. TCS ekes out a good growth performance in the third quarter and exudes confidence in the deal pipeline, but a growing economic environment weighs the stock down and the IT pack as well. Metal stocks perk up in trade as signals of China looking to stimulate growth boosts demand outlook. Hindalco and Tata Steel close with minor gains. CNBC TV 18 Newsbreak is confirmed. Axis Bank revises its deal with Max Financial to acquire 7% additional stake in Max Life. The bank confirms that the additional stake in Max Life will be acquired at a fair market value. Meanwhile, Tata Motors races nearly 6% ahead as Jaguar Land Rover's strong sales growth raises expectations of better margins and higher cash flows as well. And here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Sandeep Bhatia, who's the head of equity, India and country head at Macquarie Group. We also get you the word from TCS management on the tech majors' earnings. But before we get you all that we just spoke about, here's a look at all the market action of the day, where all the gains made on Monday were wiped out. Sensex lost over 600 points and the Nifty lost nearly 200 points in trade today. The Nifty, after this fall, is back below the 18,000 mark. Banks and IT stocks were the top losers. Prashant Nair is here with the market wrap. Prashant?
We had a fall today, and a sharp fall at that. The market giving back yesterday's gains and then some more. And was puzzling because the global setup was okay. Asia held, Europe was not down, the dollar did not rally, US futures were stalling but did not fall, but we fell here. You can kind of broadly zoom out and say, well, India was the big outperformer of 22, and this is some amount of give back which is happening in favor of other markets which were big drags last year. Banks were underperformers, and PSU banks in particular. And I think that was, I'll come to stocks in a bit, very clearly showing that mid caps and small caps, no sharp falls on indices themselves, but more down than up. Market breadth, of course, as the consequence, was negative 2:1. Losses coming through. Before I come to that, the one stock which held out in the Nifty was Tata Motors. 6% higher, hopes of a turnaround for the JLR business. It's coming off very beaten down levels, but did well. Adani Enterprises, PNB, IDBI, Bank of Baroda, IOB, UCO Bank, and so on and so forth. Big selling pressure. PSU banks, which did so well last few months, are seeing selling. Metro Brands, Nureka, some of the recent sort of performers also pulling back. Broader gainers, and there were a few: Sona Comstar, Schneider, Max Financial, which is the story we reported 3 months back, and of course now official, reacting sharply. Aavas Financial, you have Rate Gain, there was a brokerage initiation, GMDC, Chennai Petro, and a bunch of others. The big cue from here is basically going to be Fed Chair Powell, who will make a speech today. Will he push back against market pricing and easier overall market conditions? That is, I think, the one thing which we need to wait and watch out for. If he does that, expect a bit of risk off in global markets. If he sounds more accommodative, I think we may have a better picture when we come back tomorrow.
Oh, yes, we will. Prashant, thank you so much for joining us with that market wrap. Moving on to some market opinion now. Sandeep Bhatia of Macquarie Group believes that valuations in the IT sector are still in favor of investors. Adds that the auto sector could be an outperformer this year. Listen in.
Continue to buy IT in small bites over a period of time. I think the real message to us was the fact that the US is not falling apart as much as people thought in the middle of last year. There is definitely pressure on the BFSI space that will have some impact on the IT sector. But overall, the companies are still saying that they are able to manage. I think this is one sector where valuations are still in favor of us, the investors. We like Tata Motors. We like it for the India business. JLR was a big surprise. The free cash flow generation that happened in the results that just came through. So I think to that extent, JLR was the big positive surprise, which is why the stock is up. But JLR still remains the biggest challenge structurally for the business. We buy Tata Motors. We like Tata Motors essentially for the India business. One thing that I want investors to understand that as we go towards electrification, the entire automobile proposition for the buyer is changing.
Okay, that is some expert opinion coming in on the markets. Moving on to the second headline now. The Indian rupee rose to a new one-month high against the dollar on expectations that the US Federal Reserve could turn less hawkish. A weak dollar and a fall in crude globally also aided the currency. Lata Venkatesh is here with the specifics from the money markets as well. Lata?
Yes, the rupee is at the highest level since early December, and it's a gain of almost 0.7% in a single day. It's a little rare. The reasons are not far to seek. It's because both dollar and crude have weakened, and those were the factors that had pushed the rupee down towards the 83 mark in October 2022. Now, the reason why the dollar has been weakening and crude as well is because there is a sense that the Fed has tightened enough, and that is beginning to work. The non-farm payrolls clearly indicated that the monthly wages have not risen as much as the market anticipated. And since then, we've seen this seminal dollar weakening. Now, the rupee, should have started strengthening the moment the crude and dollar weakness set in. From October, the rupee has actually not strengthened commensurate with the weakness that we saw in crude and dollar. Those are the two things that kept the rupee weak. Both of them have weakened, so the rupee logically should strengthen. We didn't see it all these days, also because the RBI was intervening and buying up dollars whenever there was a rupee strength. Today, the RBI was not seen in the market for a goodish bit, and that's why you saw the rupee fall all the way to 82.10 and then below 82, 81.80. Around that point, people said probably there was some dollar buying by RBI, and the rupee fall started to stabilize and stop. So clearly now there is a bit of appreciation in order for the rupee.
Lata, thank you so much for joining us and explaining what happened in the money market today. That's about what happened with the rupee moves. But IT bellwether TCS kicked off the third quarter earnings season with both dollar and constant currency revenue beating estimates, while margin was a mild miss. However, a grim economic environment weighed the stock down, as well as the whole IT pack. Reema Tendulkar is here with all the analysis. Reema.
Thanks so much for that. So the numbers were not as bad as what the street was fearing. In fact, the revenues beat street expectations. There was a bit of a slip on margins as well as profitability compared to estimates, but again, not too bad. So the question is, why is the stock under pressure? One, there is still no clarity on what the future demand is. The outlook for next year, the year after, still continues to be fairly uncertain. Deal wins have moderated on a quarter-on-quarter basis. They're down 3.7%. The headcount has declined by 2,197 employees on a sequential basis. And this is only the third time in TCS's last 10 years that we've seen the headcount drop off. One of the reasons is attrition is coming down. The company hired aggressively in the first 9 months, hiring 42,000 freshers, and therefore they've got enough on their bench. But the other way to look at it is the company preparing for a slowdown. Also, the management is pointing to rising caution, particularly in Europe, where decision-making has slowed down, and Europe is about 15% of the company's revenues. Also, look at the deal wins, not just this quarter. In the first 9 months of FY23, the deal wins have gone up by only 3.5%. So there is a drop-off in the deal win growth improvement, because in FY22, the overall TCV or deal wins were up 10-odd%. The street estimates growth is going to slow down materially. This year, 13 to 14% was the street estimate for constant currency revenue growth. Next year, FY24, brokerages like Morgan Stanley, Kotak Institutional Equities is penciling in about a 7.5 to 8% growth. While margins have derated from peak levels, at the current juncture, TCS is trading at 25.5 times forward multiple, which is at a premium compared to its own historical valuation multiples. So that, on the other side, could be a bit of a concern that valuations are fair. But listen in to what the management had to say about the way forward and the outlook.
As we see it, there is a very strong pipeline. As I said, the qualified pipeline looks very good. In certain markets, the decision making has been a little slow, but we don't attach too much to the macro situation and the client situation, because we work very closely with customers across verticals, whether it's a broad-based order book that we have got, broad-based pipeline that we have got. So the kind of execution rigor that we have brought in, the kind of growth that we are seeing in the cloud and artificial intelligence and machine learning kind of work. So I think it all looks positive.
These 2 years have been a fairly strong growth years. The next year is more a balanced year, a consolidation year, both on the revenue side as well as on the overall profitability side. The perspectives are very different depending on the markets. And I think the most important one is that we have a divergence in US between what the larger commentary is and what our own perspective is. And the 15% Europe, which has been a big growth driver for us till last year, that is off the boil and likely to remain soft in the near future. If you go to large enterprises in the big large markets like US, UK, Europe, which together constitutes somewhere in the range of 80%, 85% of our business. And as I said, again, we are talking of large enterprises. One way to look at it is that enterprise balance sheets have never been as strong as they are today compared to 5 years ago or 10 years ago. So balance sheet repair has happened. The EC money actually resulted in a fairly good disciplined execution on that side.
Okay, all right, that's all about TCS, but let's move on to the mutual fund space now. Inflows in equity funds stabilized in December after draining significantly in the previous month, while inflow in net equities jumped threefold to over 7,000 crores. However, hybrid and debt funds continue to witness huge outflow. Pavitra Parekh is here with the details. Pavitra.
So mutual fund data for the month of December looks quite encouraging. Equity inflows have come in at a healthy near 7,300 crores for the month of December. This after the sharp drop that we saw to around 2,200 crores in November. Remember, this is even as large cap schemes continue to lose money. So the large cap funds have seen an outflow once again, although this time it is much lower than what we saw in November. So it's come in at around 26 crores for the month of December. This is versus the 1,040 crores that we saw last month. A category that has seen a big jump is the exchange-traded fund. So the inflow for this category has come in at 8,800 crores versus the 2,000 crores that we saw last time. That's how the exchange-traded funds have fared. But let's also look at the debt schemes now. There is an outflow of 22,000 crores, but nothing so alarming here because this is likely on standard quarter-end activity by corporates. So there's a big outflow there. The biggest outflow from this space comes in from the liquid category. It's at 13,852 crores. This is versus the inflow that we'd seen last month of around 34,300 crores in November. What is important to note is that the hybrid category has seen an inflow this time around. There you have it. This is after months of money only moving out of this category. So do keep this on your radar. And this is something that we should watch how it shapes up in the months to come as well. So the hybrid fund inflow has come in at 2,250 crores. Lastly, the total assets under management have come in a little bit lower than what we saw last month. So it's at 39.9 lakh crores. But the SIPs have remained rock steady. We've been talking about this. It's risen to 13,500 crores this time. And with this, it is the third straight month of the SIP contribution being above that 13,000 crore mark.
Pavitra, thank you so much for explaining what went by in the mutual fund industry in the month of December. But with that, we'll slip into a break now. Stay tuned. We'll be back in a jiffy with the other headlines.